Welcome to GraceKennedy's Investors Briefing. I am Don Webby, Group Chief Executive Officer. With me here is Mr. Andrew Masado, Group Chief Financial Officer. We welcome all participants who have joined us for this webinar. This briefing has been scheduled to run for approximately 60 minutes. We will use 40 minutes of this time for presentations and the remaining time to accommodate your questions. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. And repeat that, gkinvestor@gkco.com. You may also call or send a text to our communications team at 876-809-1121 or 876-809-0464. That is 809-1121 or 809-0464. And also the email, can I repeat the email? It's gkinvestor@gkco.com. So good afternoon again, ladies and gentlemen. Welcome to our investors briefing. We are happy that you are able to join us this afternoon. I'm going to take you through a brief presentation, and then I'll ask Andrew to do another presentation, and we'll be happy to answer your questions. Okay, so how did we do for the first 9 months, Q3 year-to-date revenue? We did well, given the circumstances and the challenges in the environment. We did well. Our revenues are up 12.2% or 11.7 billion. I'm sure many of you recall that a few years ago we had set ourselves a target of 100 billion by 2022, our 100th anniversary. Well, we are significantly above that target now, as you can see. We have a full quarter left in 2022, and we're already at 107.4 billion, up 12.2%. If you look at the chart to my right, you'll see that 55.3% of our revenue is in Jamaica, and the rest is outside of Jamaica. Both inside and outside of Jamaica, revenues are growing quite well. However, for the first 9 months of 2022, Jamaica is growing at a faster rate than our overseas businesses. In terms of profitability, not as good as revenue. We made $7.7 billion in profits, which was something that we are very proud of. However, if you look at our figure compared to the previous year, we are down 9.4%. So 7.7 billion in profits, or we are down 9.4%. Inside Jamaica, you'd notice a reversal. We have made more profits outside of Jamaica, 47%, compared to inside Jamaica at 53%. So our profits outside Jamaica has actually increased as a percentage of the pie from 45% to 47%, and inside Jamaica has gone down slightly, but again, both are showing good performances. In terms of PBT or PAT, our profits are down 4.7%, and I'll expand on that, but Andrew will share some more details. You'll see what we have a non-recurring expense of 0.3 million. Well, it's actually 0.3 billion. We had a one-off expense from a loan grant by the federal government of the United States, and Andrew will expand on that. However, profit after tax, we made 5.6 billion compared to 5.9 billion for the previous year. We're down 4.7%. So our focus, colleagues, and I'm going to put these results in context with my next slide. Our focus for the rest of the year is to finish the year strong and start 2023 also strong. And that is the main focus of the management team and the team at GraceKennedy. Let me try and put the performance into some amount of context. So, as I said at our AGM, we meaning GraceKennedy, we meaning Jamaica, and we meaning the world at large, we are facing significant headwinds. Let us look at rising inflation. One would think rising inflation more affects our food business. But I can tell you the most significant impact that the global inflation has had on our business is actually our remittance business. The disposable, and we have done quite a bit of research, the disposable income of our Caribbean diaspora in the USA, where you see that the inflation rate is 8.2%, in the UK, especially 10.1%, and in Canada at 6.9%. Basically, what we're saying is that the disposable income of our Caribbean diaspora in those countries has been affected significantly by global inflation. What does that mean? It means that the ability of our brothers and sisters in those countries to send money back home to their loved ones has been negatively impacted. And you'll see from the numbers released by the BOJ that remittances to Jamaica is actually down 2% year over year, or $50 million US, and that is significant. I'm going to, later in my presentation, I'll share with you what GraceKennedy Western Union is going to be doing to try and turn around that impact. Inconsistent supply of products, and our USA business were affected the most. And so, to give you an example, for the first quarter of 2022, our normal receival of containers in the USA market would be maybe 70-something containers. We received 150 containers over that same period. In other words, because of the congestion on the wharf and the inconsistent supply of our products, basically it was a hell of a task in terms of clearing those containers, storing them, and trying to clear the demurrage. And we had a cost of over $2 million US. We have improved that position. It has been getting better throughout the year, and we expect 2023 for some normality to be there. Interest rates, and let me say that I was very pleased to hear our central bank governor, Richard Biles, saying that at the 7%, which you'll see there, in November 2022, that he will consider a pause. I believe that is a positive move, and I also want to congratulate our central bank to try and maintain our inflation rate, which is truly a monster, as I had said before. So I want to encourage our central bank to continue doing what you are doing. Is extremely, extremely important that inflation be brought under control. So this is not to what I refer to my management team as to externalize the performance of GraceKennedy. We made $7.7 billion in pre-tax profit, but I wanted to put it in context in terms of our performance and the headwinds that we are facing. And I notice a number of my other colleagues, public listed companies, are facing a similar situation. I want to point out to you the slide that you currency 2022 movement versus US dollar. What you're seeing there is significant for the GraceKennedy group of companies. Remember, over 40% of GraceKennedy's profits are generated outside of Jamaica. And I showed you the pie chart earlier. Have a look at the depreciation. So the pound depreciated against the US dollar by 14.5%. Canadian dollar by 5.8%. However, the Jamaican dollar appreciated against the US dollar by just under 1%. You know, if you put that in context that our major trading partners have a depreciation of their dollar or their pound, and we are appreciating, one can understand the impact it is going to have on the GraceKennedy Group, which has been a negative impact of that scenario that I have showed you. But we understand the efforts by our central bank to try and contain inflation, and as you know, they have been intervening very heavily in the foreign exchange market in Jamaica. So if you look at the business highlights now, we have a lot to be proud of. We have just about concluded the acquiring 100% of Scotia Insurance Caribbean Limited. Obviously, this is subject to the regulatory approvals and the customary closing conditions. At the end of this transaction, GraceKennedy is going to be just about into 14 countries, and we believe that this could be a game changer. It's a new business line for us in terms of creditor life and life insurance. We are very excited to be partnering with Republic Bank and Scotia Bank in the Southern Caribbean, and we are very positive. Our acquisition of Scotia Insurance Eastern Caribbean Limited has been very, very positive, and all the targets that we have set ourselves for this acquisition is being realized. Private equity investment, as you would have read, we bought 60% of Blue Dot as a private equity investor. The plan is actually to list this company in the future. This strategy is very clear. It's actually a pan-Caribbean strategy. The services and the data and the skills of Blue Dot can be stretched to the Caribbean easily. And in fact, Lauren Peart, our Managing Director and Chief Executive Officer, and actually the founder of Blue Dot, was in Trinidad for the last 2 weeks. And the feedback that we are getting in his briefing to me has been extremely, extremely positive. So we expect that the growth of this company is going to be significant coming out of the Eastern Caribbean. We're pleased to announce earlier this week that GK Capital was the chief advisor and brokered Regency Petroleum Limited. And GK Capital, we have actually decided to take a position in Regency Petroleum Limited. I'm very positive about that IPO. And in fact, I've challenged my GK Capital team, Dougie and Patsy and Stephen and others, that I would like to see GK Capital carrying at least 2 or 3 companies per annum to the junior stock exchange at least. Our mutual fund with Trinidad and Tobago Unit Trust, a lot of people don't know that Trinidad and Tobago Unit Trust, or TTUTC, is one of the largest financial institutions in the Caribbean. We are extremely, extremely happy to be partnering with Trinidad and Tobago Unit Trust Corporation. Nigel Edwards, their managing director, is very, very gung-ho about this relationship, and so am I. So we expect to launch the mutual funds in Q1 of 2023, and I can assure you it is going to be positive, and investors are going to be very excited about what we're offering in the mutual fund space. It's going to be very innovative and very unique. In terms of our mergers and acquisition strategies, we have 3 sizable deals that we're looking at now. One in financial services, and that one is outside of Jamaica. And we have 2 in the food division, which is actually inside Jamaica. I'm hoping that these transactions will be closed by Q1 of 2023. Our Hilo Grill store, which is a picture there, we opened in October, and it's performing significantly better than we could ever imagine. It is on a 7-mile stretch, and with the upcoming tourist season coming up, we expect it to break all records that we have put in place. So we're happy with Hilo Grill, and we'll continue to look at opportunities to expand our retail network. And in fact, Hilo is actually having a very good year. Majesty, you will recall, is our joint venture in Florida. That company is doing well. We just got, well, not just a few months ago, Traders Joe, which I'm sure Trader Joe's, which I'm sure a lot of you would know of. Our patties can now be found in Trader Joe. And we're going to be expanding our relationship with Trader Joe. And in fact, an announcement will be made shortly where we have expanded to one of the largest supermarket chains in South Florida, where we are going to be producing their patties exclusively under their own brand. I'm very excited about Majesty, and I want to congratulate Colin and Gary and the team, Veronica. This investment we are very proud of, and you are meeting all our targets. And obviously, there is significant growth left in the patties and empanada business in the USA. Our Lafayette brand, that's our Hispanic brand in the USA, is up double digit, and the margins have in fact been doing well, and we expect the Lafayette brand to continue to do well. Manufacturing is going to continue to be a key strategic driver for the GraceKennedy Group. GraceKennedy, we are going to continue to be investing heavily in manufacturing. Our NALCAN project, that's a merger of NALPRO and the canning plant, it's on the way, and we're hoping to be fully integrated by year end, and we're going to be seeing significant efficiencies by the merger of those two plants. We have set ourselves a target, and I'm very focused on this target here, where we want 50% of our production from our factories to be outside of Jamaica or being exported to earn the valuable foreign exchange for GraceKennedy and for our country. We're about at 30% now. We have some amount of work to be done, but with the investments that we are making, we believe that target is really, really doable. Energy reduction and costs, big focus for us. We have invested US $3 million to implement solar systems. The numbers that I'm seeing, savings for our factories, Hilo and other companies, is significant, and we're going to continue to try in every way, in a sustainable way, to drive down our energy costs. That is the only way, colleagues, that we can remain globally competitive and CARICOM competitive, believe it or not, if our energy cost is significantly reduced. We have done our work. Solar seems to be the best option for us at this time. Money services. You would say that our Western Union numbers are down. I did say that the remittances to our country were down 2%. And by the way, this is not only for Jamaica. When you look throughout the Eastern Caribbean, Trinidad and Guyana and other Eastern Caribbean countries, remittances are down. And I have explained our analysis on why, which is that the global inflation is having a significant impact on our diaspora, and their ability to send money home is being challenged. Having said that, we now need to stimulate growth for our remittances back home. In doing that, it's going to be a win for Western Union, it's going to be a win for GraceKennedy, and it's going to be a win for Jamaica. We need remittances to be up, not down 2%, up. In all my career at GraceKennedy, which is over 25 years I've been at GraceKennedy, I've never seen remittances down in our country, never. So we now need to see what we can do, what is within our control to grow the remittance market again. And in fact, I'm having a meeting with the top executives at Western Union on Wednesday to discuss further how we can stimulate remittances to Jamaica and the Eastern Caribbean. So our plan is to improve on the marketing in the diaspora. We have 2 country consultants in Florida and New York. They are going to be there every, what we call in Jamaica, every nook and cranny, beating the pavement to see how we can stimulate that growth. We're going to be looking at our pricing to ensure that we are priced very competitively to grow the business. Our agent network in Jamaica, we have over 200. We are going to be meeting with them. Grace Burnett and Margaret have already started to see how we can work with them to ensure that we can get that growth that we both desire. Compliance, as I said to you many years ago, GraceKennedy Western Union, we have a zero tolerance for compliance on our network. And while we're going to remain strict and robust with our compliance system, we need to examine it very carefully to see if there are areas that we can improve on to ensure that our folks, our brothers and sisters overseas can send money home in a less hassle-free environment. And finally, customer centricity, which is the hallmark of GraceKennedy in any business. Without our customers, we're nothing. And we need to embrace our customers. We need to be more externally focused and ensure that our customers are happy with our business. So we have kind of impact. Every initiative that I've shared with you here have what I describe as a KPI, key performance indicator. What gets measured gets done. And this is being monitored basically on a daily basis to see how we're going to drive more remittances in our country. Based on what I've seen, we started the initiatives in September, October. Based on what I've seen, I'm seeing the gap being closed. So I believe that we're going to finish the year pretty strong, and 2023 is going to be a much better year for remittances, not only for GraceKennedy and the Eastern Caribbean, but for Jamaica and all the countries in the Eastern Caribbean. And I say that notwithstanding the talk about recession in the USA market. We have also looked at the other side of the equation in terms of cost and efficiency. We have engaged Ernst & Young to look at our structure and our P&L to see how we can be more efficient as a company. You know, when you're going through a difficult time, when there's a crisis, there's an opportunity, and there's always going to be an opportunity to be really refocus on our business, not only for the remittances, but right throughout the GraceKennedy Group to see how we can become more efficient. I'm always looking at opportunities in a crisis situation, and I believe that the other side of the equation in terms of efficiency, productivity, etc., you're going to see significant improvement in the GraceKennedy Group in 2023. Digital transformation. Colleagues, friends, I said it, I think it was at our AGM or our previous investors briefing. When COVID hit, we realized that all our plans to transform GraceKennedy digitally, digital transformation, we had to move it forward by 2 or 3 years. In other words, what we're planning to accomplish by 2025, we brought it forward to 2022 because COVID basically changed the world in the way we do business and how the way we interact with each other, even in an office setting. So we have invested heavily. 711 million we have spent as of October 2022. Andrew, for this year alone, we have invested over $200 million, of which most of it has been expended to the P&L, 165 million. Having expenses to the P&L, it's an investment that we're going to realize the benefits in the future. And I'm really, really positive about the transformation. Here you'll see some of the features of our app, digital KYC registration, remittance collection on your card. You can apply on GK1 for FGB, Visa credit card, access high-low e-commerce. And in fact, I got feedback that a number of our guests in Jamaica on the Negril stretch, the 7-mile stretch, is actually using high-low e-commerce to get their groceries in their respective villas. Here's a short presentation. I can say, but I think this has been more meaningful to everybody. Do I press again, colleagues? Press one more time. Enjoy. I think you need to turn it off. That was, if I may say so myself, fantastic. I think it's going to be a game changer. And I would encourage everybody in this room, all my technical people here, if you have not done so already, and all the viewers that is watching this presentation, download the GK1 app. Is the most fantastic app that I've seen in a very, very long time. Of course, I may be a little bit biased, but it is extremely, extremely fantastic. Please download it. It's going to make your life that much easier. Okay, I couldn't leave out my food colleagues. This chart, I hope you find it very attractive. So we spent last week 2 days as an executive team, 50 of us, basically locked out in a room, brainstorming strategy for 2023 and going up to 2030. And we asked our chief marketing officer about mainstream. Because if you think about where we want to go, and I'm going to show you some numbers for the 2030 vision, while our Caribbean diaspora is quite large by our standards, our vision for the GraceKennedy Group is way beyond the population of Caribbean people living outside of Jamaica. And the question was asked, based on our strategic initiatives and intent, what products you think that we can expand and cross over to the mainstream market? And mainstream also mean Hispanic. Tropical rhythms came out as the #1 item. And many of you may not know that we are actually partnering with Arizona in the Northeast to distribute tropical rhythms. We had our challenges in 2022 with the supply of glass bottles, but we believe that we can double the sales of tropical rhythms within 3 years. Arizona, as you know, is one of the largest beverage companies probably in the world, and they are also very positive about tropical rhythms. You'll also notice, and when I said that there's a crisis, there's an opportunity. You'll see the Tetra Pak tropical rhythms in the 1 liter case or packaging. Because we were short on the bottles, we doubled down for the Tetra Pak, and the Tetra Pak is actually doing extremely well. So this is another classical example of when there's a crisis, there's an opportunity. But we believe that our TR with the Jamaican culture, and by the way, that bottle that you're looking at is produced at our manufacturing plant right here in Kingston and is being exported. So we believe that tropical rhythm is going to be huge, huge in the future, and we're going to be investing behind that product. We also believe our jerk is going to be a game changer. You would say our jerk. And as I've said with the story, we have contracted farmers to grow pepper and scallion. We process it in Hounslow and we bottle it in Denby. So anybody want to talk about authentic Jamaican? What you're looking at there in terms of that, what we refer to as a jam bottle, you can't get more authentic than that. The only thing that is not Jamaican grown or Jamaican produced is the bottle. And that's something that we as manufacturers and producers in Jamaica, we need to think about, because we're going through a big, big crisis in terms of supply of bottles for 2022. And maybe we need to get together, John Mafood and others, to see how we can recreate a West Indies glass company. So again, our jerk, the UK, Canada, USA, is found in all the major chains, and we believe that it will cross over. Then if you look at Encona sauce and hot pepper sauce, Encona is a GraceKennedy owned brand. It's actually produced in our factory in Corwin in the United Kingdom. It is found in all the major chains, Tesco, Sainsbury, and in fact some of the high street restaurants. And that again we're going to be investing behind to cross over. And then of course our famous 3-ounce hot pepper sauce, you see that we are increasing the SKUs in terms of what you are seeing there. GraceKennedy, we actually own 35% of that factory, along with my good friend and partner Andrew Gray, who has been working with GraceKennedy for at least 40 years. So I wanted to show you these products here, because sometimes when you focus on a few items and what can really be huge, we believe in terms of the mainstream market that these products can be huge. I've asked my team to come back to me within a few weeks to create that detailed strategy from production to marketing to distribution of how we're going to double the sales of all of these items that you have seen here, with a focus on TR, jerk season and jerk inspired foods, and Kona and hot pepper sauce for the first phase. GK 100 highlights. Our foundation, we had a lecture entitled A Centre of Excellence, Grace Kennedy's Recipe for Success. It was, in fact, a huge success. I felt very honored, I felt very privileged to be sharing the platform with my mentor, Douglas O'Rain, and one of the founding family members, Fred Kennedy, who is actually chairman of our foundation. It was fantastic. I learned a lot from Fred and Douglas, and I'd encourage you. It's on our YouTube channel, Suzanne, so you can go and watch that. 100 Acts of Grace. While we are facing our challenges, we're always going to be giving back to our communities, despite the challenges that we are seeing and the headwinds that we have said. We are now at 67, with a few weeks to go, but I've challenged my team that we've got to get to 100. We have invested over 152 million in Acts of Grace, and I believe what is good for Jamaica is good for Grace Kennedy. And we have, in fact, in the communities overseas, we have also made community investments. One of the most pleasing statistics that I got recently, you recall I challenged a team that we need to assist 1,000 children by 2022 to go to school. These children could not otherwise afford an education. They are from the inner city and from the poorer families in Jamaica. And as I said, education should be a privilege, not a right. When in November 2021, I got the call that we are now at 1,000, which I felt elated. And before coming down to this meeting, I made another call, and we are now at 1,333 students that we're helping to go to school. And that is what Grace Kennedy is about. That's what is in our DNA. And we are going to continue to contribute to education in Jamaica. I've asked my team, I'm now chairman of the Grace and Staff Community Development Foundation, that the next phase for us, I want to look at early childhood education in terms of helping basic schools with some nutrition and the infrastructure. Some of these basic schools don't have a fridge in there and other appliances, which we really need to get right. The government alone can't do it, and whatever the private sector can do, I will encourage you to do so. But somebody asked why Grace Kennedy lasts 100 years. One of the reasons is our core values: honesty, integrity, and trust, respect, humility. But that humility also includes giving back to our community, something that I'm very, very strong about and will continue to do so despite all the challenges that we face. I want us to look forward a little bit. I've been speaking at our AGM and the foundation, but I want to share with our investors this afternoon about our 2030 vision and our purpose. And I will read it to you. We have shared it with our team, because when you have a vision and when you have a purpose, colleagues, one of the most important things is that your staff, your team, your stakeholders understand where you are going. So the over 2,000 Grace Kennedy staff members that we have here, they need to understand, from the lady that served the coffee to the group CEO, this vision that we have for this great company. And I'll share it with you. Our purpose, this is our new vision and our new purpose, to bring superior products and services to customers that contribute to a better global society and greater financial well-being. Our 2030 vision, new vision for the Grace Kennedy Group, to be the #1 Caribbean brand with Jamaican roots and a global reach by building on our core pillars of foods and financial services to provide strong returns to our shareholders and improve the quality of life of our team members, customers, and the communities we serve. And you'll be hearing a lot more about our purpose and vision as we journey towards 2030. But as I said, alignment, we need to look at what does that mean in terms of the numbers, and what does that mean to the investment community and the public at large. So I shared with you the pie chart, where we're at 47 and 45 for revenue and profits. We are saying as we journey towards 2030, 70% of our revenue and profits are going to be outside Jamaica. I want to repeat it again. We're going to be growing significantly in Jamaica, but because the markets outside of Jamaica is so huge, and we intend, as I shared with you some products, to cross over to the mainstream. So what you're going to be seeing is significant growth in the USA market for the GraceKennedy Group. We're in about 500 Walmart stores now. Walmart has about 5,000. We're going to be increasing that significantly, and other chains. In Canada, with the Loblaws of this world, we're going to be growing significantly because it's huge. It's not only the Caribbean diaspora we're going to be serving, it's the global community. And of course, the UK, Tesco, Sainsbury, and others. So we're going to be growing in Jamaica significantly, but because the market overseas is so huge, we're going to be growing faster overseas than in Jamaica. Our current revenues, as we speak, in terms of the audited accounts, is US $813 million. By 2030, we're going to be a $2.1 billion company, a $2.1 billion company in 2030. Our current profits before tax, as I shared with you before, for the audited accounts is $68 million. We're going to be a $250 million US dollar company. And of course, and I've said it many times, that I believe to unlock the shareholders' value of this great company is to actually to list our food business on an overseas stock exchange. And in fact, Andrea Leorini and myself and others, we have been on calls in New York and Florida about listing GraceKennedy on an overseas exchange. The initial feedback has been very positive. There's a lot of mechanics to do with the balance sheet, etc. But they said to me, Don, this is a great time because the ethnic food market in the USA is growing, and there's a lot of excitement in Wall Street about ethnic foods. So we are going to continue to have meetings. In fact, I have a meeting this December with some investment bankers to try and help us and guide us in terms of how do we list our GK Foods business on an overseas stock exchange. And of course, GKFG, our financial services company, we believe we want to list it on the Jamaica Stock Exchange, and by extension, possibly the overseas exchange. I think that is going to increase the market capitalization of GraceKennedy by at least 4 times by 2030 if we can deliver on these numbers here. Having said that, nothing is going to be possible without the great staff and the team that we have here. Colleagues, we have a hard-working, dedicated, focused, committed team at the GraceKennedy here. I am blessed to be the group CEO leading such a great team at the GraceKennedy Group, and I want to use this opportunity to thank them from the bottom of my heart for all the support in what has been a difficult year. I know all of you have been working extra hours, long hours to try and get the great company going again in terms of performance and surpassing our previous year numbers. And I want to thank you for your efforts. I really, really, really appreciate it. And going into 2030, we need to create a better life and attain wealth and achieve common goals and with our motivated employees. Thank you again to the GK team. It certainly means a lot to me personally with all the effort that you're putting through. And of course, ESG, not a nice to have anymore. It's a must have. I've asked Gail Solomon and her team, and she has been in touch with Pricewaterhouse, NASDAQ Consulting, and Adam Atalan's company to try and get us going. We have committed that we're going to be moving this forward at a pretty rapid pace. In fact, I can tell you, if we have any thoughts of listing on an overseas exchange, you can't even think about it without a proper ESG policy. It's going to be a non-starter. And some financiers are not even talking to you for capital investment if you don't have a proper ESG policy. So that is going to be a major focus for us. So in closing, ladies and gentlemen, thank you again for joining us. And let me close by saying that we remain committed to achieving our strategic objectives and improving the lives of all of those we interact with in the communities we serve. Notwithstanding the challenges, we look forward to closing out the year with a strong performance, powered by, as I said before, our amazing team, sound strategy, and world-class products and services delivered at the highest standard. I thank you very much, and now I'm going to hand over to Andrew Mesado, our Group Chief Financial Officer.
Thank you, John. So I'm going to give you some brief financial highlights for the quarter. And what you'll see from these highlights is a mixed situation where we've had good top-line growth, and we have a strong asset and equity position. In terms of revenue, as was said earlier, this is the first time before a year end that we've actually achieved revenues of over $100 billion. A 12% growth, or $11.7 billion. A lot of this growth in revenue driven by our food division, both our domestic food and our international food companies are showing strong growth in revenue. In terms of profit before tax, you'll see a decline to $7.7 billion, 9.4%. Now, a number of factors have caused this. I'm going to get into the segment results a little later on. But as was mentioned, we have seen that rising costs and the kind of uncertain and unpredictable situation with supply chain has impacted our results. And in addition to that, the inflation has also affected our remittance flows into Jamaica. In terms of our net profit after tax, you'll see that it is at $5.6 billion now. This compares to $6.3 billion last year. As was mentioned earlier in the presentation, there was a one-off gain in 2021, which resulted in a $300 million gain related to a conversion of our loan into a grant, which would not recur again this year. If we were to normalize for this result, you would see that we would really be comparing 5.6 to 5.9, $278 million reduction, or a marginal reduction of 4.7%. So operationally, the decline is not as significant, and there is time, during the last quarter of this year to end strong for 2022. In terms of our asset position, you'll see that we are now exceeding $200 billion in assets. And a lot of that growth is coming from our liquidity position, where our cash and deposits are up by $4 billion, from $30 billion to $34 billion. So even in these times, difficult economic times, the GraceKennedy Group has maintained a strong liquidity position to put it in good position to fund its working capital, to look at acquisitions, and also to defend any situation where it needs to make payments. You'll also see that our receivables and inventory have gone up. And this is really a reflection of the growth in the business. That top-line growth will generate additional receivables and inventory requirements. And then the other area, also an indicator of growth, is our loan portfolio. First Global Bank has increased its loans to customers, and so that has also contributed to the increase in our asset position. In terms of equity, you'll see our equity continues to grow, and couple the equity position with the strong liquidity, we are going to be able to declare a good dividend. You would have heard the announcement on the 10th of November, where we declared a dividend of 58 cents per stock unit, and that compares to 48 cents in the prior quarter. And so for the first time, by the end of this year, you'll see that we will have paid out just over $2 billion in dividends. So continue to return, make a good return to our shareholders. Now, I want to just focus a little bit on our segment results. Firstly, in terms of revenue, you'll see that 3 of our 4 business segments have shown growth in revenue, and those 3 have actually grown by all grown by double digits compared to last year. In terms of remittance, I had mentioned earlier that we have seen some reductions in foreign currency inflows to Jamaica as the sending markets have experienced an impact in terms of their disposable income from rising inflation. And so that has affected the remittance revenue. However, within money services, we have seen growth in some areas. So because we have seen growth in the tourism industry, our Cambio business, FX Trader, has shown improved revenue performance. And then our bill payment platform, Bill Express, has also shown increased revenue coming from its digital channels. In terms of insurance, you'll see strong growth in insurance there, being driven by our core business. What you'll see is that Key Insurance, which just released the results, has shown good growth, and we're also seeing from GK Life, which is a new acquisition that we did in the 3rd quarter of last year, also producing good results. In terms of our banking and investments, our bank has been increasing its loan portfolio, so that has shown strong revenue growth, and also our asset management company has also increased the number of transactions, so they have also shown good revenue. On the food side, you'll see a 13.7% growth, or $11.7 billion in revenue. Coming on the domestic side, we've seen a lot of our key products, our Viennas, Frankfurters, the tropical rhythms, as well as our tasty cheese doing very well in the market. World Brand Services, our company that distributes third-party products, is also celebrating their 20th anniversary this year, and they have been doing very well with their products. Internationally, we've seen growth for both our USA and UK markets, and both of those entities in the US, we've seen our Lefay brand. The acquisition of the Lefay brand was done in 2014, and we see continued growth since we had relaunched that brand in 2020, and now it is doing very well for us. And then also in the UK, our nourishment meal replacement drink is also doing very well. Taking a look at our profits, you will see that it's a mixed situation. For money services, I mentioned earlier, a lot of that is flowing to the bottom line in terms of the revenue being down. On the insurance side, a very marginal reduction, but what you would note for insurance is that it's more has to do with our investment portfolio. As you know, our insurance company would invest in equities. The equity market has shown some softening for this year, and therefore has not returned as much on the investment side of the portfolio, but the core business has shown good growth. On the food side, you'd see a marginal reduction as well, mainly as a result of of the rising costs we've seen, shipping delays, increased costs of shipment and distribution, as well as some level of product unavailability that would have impacted the profits for the food side. On the banking, you see significant growth of 63.5%. Here, we are seeing the results of our asset management company doing very well this year. Earlier on, we had taken 2 companies to market and realized good gains from that. And then, as was just mentioned earlier in the presentation, we have another IPO in the market, Regency Petroleum, that we expect to do well. So overall, we're focusing very keenly on cost management. We're continuing to look at our growth on the top line from revenue and ensuring that we can meet our customers' needs and return a profit to a stronger profit position going forward. Thank you.
Thank you very much, Andrew. Thank you very much. Questions, colleagues? Okay, I have a few questions here from David Rose. I'll just read the question and then Andrew, you and I can answer. While the food segment has experienced a 14% jump in revenue over the 9 months, the operating results is down 8%. I recall you mentioned a US $2 million expense at the AGM earlier this year for logistics for this segment, but GK isn't rising prices fast enough to compensate for rising prices of inventory? That's a great question. Yes, so in my presentation, David Rose, I think David is the observer, I did mention the $2 million actually relates to our US business, where on a normal basis over the time period we normally receive 70 containers, and because of the inconsistent supply and the congestion at the ports, 150 containers came in at one time. So that is actually 2.7 million, which we had to expense in the first quarter of this year. So you can see the impact when you multiply that by 155 it has had on the GraceKennedy Group. However, the good news is that going forward, for the 6 months after that, it has been very marginal, and we have managed the situation very well. And that is why we expect the last quarter to be even better for our USA company. This issue of rising prices is an interesting one. I'll share with you. Some of our suppliers, they have increased our prices, our costs, some as high as probably 30-odd%, 35%, some of the mainstream products that we have. But there's no way GraceKennedy in any market can increase our prices by that amount. So you typically find that, a 4 or 5%, certainly under 10%. So we have had to absorb the 20%. So if you look on the GraceKennedy Group in terms of the food division, our margin has been down between 1 percentage point and 2 percentage points. And if you do the mathematics, you can see that it is significant that we're talking about. But we have to bear the consumers in mind and their affordability. So we have to find other ways in which GraceKennedy can become more efficient, that we don't have to pass on all of these cost increases. And of course, negotiate with our supplier in a firm way. So yes, we have not passed on all the price increases. Some of them, we have absorbed most of the cost increases. But on the other side of the equation, we have looked at ways that we can operate more efficiently so we can return a proper profits to our shareholders. That's a good question. How is the pipeline for GK M&A unit looking beyond the stakes obtained via GK in the IPO? Yes, I did mention 3 that we have, and those 3 we are hoping to complete by the first quarter of 2023, if not before. 2 in our food division, both of them are located in Jamaica, and 1 financial services outside of Jamaica. Why was the stake acquired in Blue Dot 2022 Limited versus Blue Dot Data Analytics? Good question. When you're doing an acquisition, without getting too technical, you have to look at the capital structure of the various companies, and we decided to start a new co with GraceKennedy owning 60%, and Lauren Peart and his team owning the rest of the 40%. And remember, the long-term, well, medium to long-term objectives is to carry the company public, so the capital structure and how we dealt with that became very important. First Clause increased the interest rates on variable loans in July, with the BOJ policy rate now at 7%. Do you expect to be further hikes at FGB if rates were? I guess the same is true in terms of what I said about the food division. We only increase loan rates to our customers unless it's absolutely necessary. It's almost like a last resort. So we have to look at other areas in the bank that we can become more efficient, that it doesn't become necessary to pass on the increases. Obviously, Ratif Daly and his team on the board, along with Peter Moses, they will look at the various scenarios and make a decision. One of the things that I'd say that, and Andrew did say it in his presentation, is that the loan portfolio for FGB has been doing extremely, extremely well, and the MPL status is also doing very well, the non-performing loans. So the credit management of the bank has been good in terms of booking these new loans and minimizing any losses going forward. But obviously this is an ongoing discussion, so I cannot say to you that we're not going to be increasing rates. However, I would say it's probably a last resort in terms of that decision. Would GK ever consider exploring a share buyback program again in the market? Well, as you know, share buybacks is a common way of giving back to your shareholders value, and we are always considering how can we give back value to our shareholders. The market in Jamaica now, with the interest rates going up, people are moving away from equity investments to fixed income investments, and what you find is that the Jamaica Stock Exchange has been under decline. Some of the blue chip companies, their market capitalization is down significantly. That is always the appropriate time of how you're going to give back to your shareholder. So I would say to you, yes, that's always the option that we're going to be looking at, a share buyback program. With GK aspiring to list on an international stock exchange in the future, can the disclosures through quarterly reports be improved? There is continued market erosion of capital for long-dated instruments like bonds, and shareholders aren't aware of the regulatory ratios for any financial subsidiary by the BOG or FSC in Jamaica. Mr. CFO, you want to take that one?
Sure. In terms of the regulatory ratios, the GraceKennedy Group and its financial services subsidiaries have to report every month those ratios to the regulators, and we are certainly in compliance with all the ratios. We have what we call our early warning ratios as well. So if there's any indication that we could, in future periods, be running into any challenges, we have those early warning indicators that allows us to correct it over time. So the regulators are very much aware of all our ratios, and that we are in full compliance with them.
Okay. Any update on the Scotia Insurance Caribbean Limited acquisition? I think I addressed that in my presentation. Yes, it's moving along well. It's now subject to regulatory approval, and I know my team, Stephen Whittingham and Kerry-Ann and the team, they are working hard to get those regulatory approvals. One thing that I'd say to you, when you get in those approvals though in the Eastern Caribbean, you have to go country by country. So it's time consuming. So I would think Q1 2023 is probably a realistic time, but I don't see any showstoppers or any deal breakers as it relates to that transaction. And I'm so excited to say that GraceKennedy is going to be in 14 countries, certainly by the second Q of 2023. And it has been accretive. Eastern Caribbean has been accretive and growing. Happy to have Republic Bank as a partner and Scotiabank going forward. Are there any possible partnerships being explored with Scotia Group Jamaica before the end of the year through GK General? We're always in discussions. Scotia is it's a good partner for the GraceKennedy Group, and we're always in discussions of how we can work closer together in terms of meeting our customer needs. So Audrey, Togwell, and myself, we're always in discussions to see how we can work closer for a win-win situation, both for GraceKennedy and for Scotia Group. Was GK Foods UK revenue flat in pounds or in Jamaican dollar terms? It was actually growing in pounds. Remember what I said, that the pound devalued against the dollar by 14.5%. So if we were to measure it in pounds, it would be doing fantastic. However, when the Jamaican dollar appreciate against the US dollar by, what I said, 0.6%, you realize the impact it is having on our consolidated results, which is not good, I can tell you. However, we believe that it will improve again, the pound. Hopefully the UK economy settles and we can see some positive signs coming out of that relative value of their currency. Also, apart from the GK Financial Service, how positively GK Food segment been impacted by the stable FX rate year over year? Remember, a lot of our profits from the food division is actually generated from outside. So there's not much positive there in terms of what you have asked. And then to contrast that to what has been happening is that the suppliers, they have been increasing the cost of a number of our raw materials for our factories and finished goods. So any benefit of a stable foreign exchange in the Jamaican market has been outweighed by the cost increases by some of our suppliers. We believe that those cost increases will normalize for 2023 and that we are returning to some sort of a normality. By the way, one of the important points that I want to make is that the freight rates, which we had reported was US 17,000 coming out of the Far East, is significantly down. Going into our New York ports, I think is about 7,000 now, and into Jamaica is just about 10,000. So we are hoping that we'll see that those freight rates, which is a significant part of our cost of goods, will be able to flow through to GraceKennedy's margins and by extension to our consumers in that regard. So that's another positive sign of some sort of a normality returning to the global trade. Can you provide an update for expansion plans into Barbados? This is from Marlon Madden. Expansion plans are ongoing. Let me say that we own 50% of Signia, along with the Cape Shepherd Group, which is a merchant bank. It's actually the largest merchant bank in Barbados. And Marlon, that company has been performing exceptionally well in Barbados. And when I say exceptional, I'm being humble. I guess the turnaround or the growth in the Barbados economy is a reflection of that. But that company is showing significant growth both in revenue and profits. What we're hoping to do with Signia is actually use that as our foundation in merchant banking in the Eastern Caribbean to look at acquisitions throughout the Eastern Caribbean in similar businesses. I am so pleased and happy with our investment in Barbados, and we're always going to be looking at other opportunities to grow business in Barbados, whether it's mergers or acquisitions. And in fact, I'm heading there in a day to have meetings, but let me leave it there at the time being before I get myself in trouble. All right, moving along. I like this question here, and this is from Philip Burgess. God, you're making me feel jealous, Philip. I need to be able to transfer funds to a bank account in Jamaica while sitting on a couch or a beach in Turks and Caicos. Wow. Oh, man, I can imagine that beach in Turks and Caicos. You know, we have a lot of beaches in Turks and Caicos. So the answer to that is direct to bank from Turks and Caicos to Jamaica. The service is actually now available, and we're offering the service from Cayman, Bahamas, and TCI to Jamaica. It requires registration, which we will soon begin, offering at our location in Turks. So Philip, you need to go and get registered ASAP before you go on the beach. But yes, and you can. You can, and that's what also the whole digital transformation is going to be about, where you can send your funds to a wallet, etc. How far along are the plans to list foods overseas and spin off the financial arm? We're making steady progress, Philip. I've been having discussions with investment bankers, as I said earlier, and it's going to be a long process. Remember, we said by 2030, but the signs have been positive. We just need to continue to have discussions with our investment bankers. Andrew is going to have discussions with Pricewaterhouse, because we're going to have to look at the balance sheet of the financial services and foods to see how to spin them off, and that is going to be quite technical. But I'm happy with the pace, and as I said, I'll be meeting with the investment bankers in December to take the discussion forward. But we are very, very focused on that. Are the considerations for a stock split completed? I would say, based on the market that we are seeing now in terms of the softness of the market because of the high interest rate, we're probably going to take that off of the priority list for the time being in terms of our stock split. Any more questions? Oh, how are your investment in Barbados performing? I just answered that. Yeah, this question is from Sean Comerbat. Sean, I hope you heard me that we are jumping, that our merchant bank in Barbados is performing exceptionally well, and we are pleased with that. And I'm always going to be looking for more investment in Barbados. I consider Barbados to be a very welcoming and friendly investor country. Sorry, I guess in the questions fast and hard. This is for Karina Bennett. I think Karina is with the Observer now. At the 2021 investors briefing held earlier, you indicated how it could integrate more international manufacturing into Jamaican plants because of the supply chain challenges caused by the pandemic and rising production costs from the UK and Russia war. Yeah, so listen, it's still on the cards, Karina, to expand our business and bring home what we can. And I did say Tropical Rhythms out of Canada. But one of the things that we have to do first, that merger that I spoke about with Nalcan, we'll have to complete that and get that settled before we're trying to increase any capacity as we speak. There's a product that we're going to be doing at Denby, and I think I can say it, our browning is going to be Denby. I didn't realize browning was such a popular product, but we ran out of production because of some challenges, and we have decided to produce it ourselves, and the feedback has just been fantastic. So yes, we're going to be, remember, the plan is to export 50% of our products by 2025, and to do that, we're going to be bringing back home some of the production, but also products that we have here now. We're going to be going on a serious export drive to increase the market share of those products, including Tropical Rhythms, including our jerk sauces, and including our hot pepper sauces. And I think that's going to be a very exciting journey, but we are very focused on that. Al Edwards from Our Today. In terms of the food business, how can we get more Jamaicans to get behind local producers? Boy, Al, this is a great question. You have talked about reducing the food importation bill, which is now over $1 billion. Al, this is a great question. You know, when we have a crisis with COVID and we talk about food security, it's actually a wake-up call for all of us. Because believe me, we at GraceKennedy, we spent some sleepless nights working with suppliers all over the world to try and get our products on the shelves. Because remember, the competition with our suppliers, they supply all over the world, and we, as Jamaica, we have to hold up our hands. And luckily for GraceKennedy, in some cases we're a large customer, so we got some amount of preferred treatment. But for Jamaica, as I said before, we need to set ourselves a target of reducing our food import bill from 1 billion to 500 million by 2030. What we need to do, Al, is we need to roll in the bureaucracy, and we need to roll out the red tape. We need to look very strategically at agriculture, which I know Colonel Charles Jr. is doing, but by extension, we need to also look at agro-processing, because what you find, you have a lot of farmers, they're producing okay, but there's no market for it because there's no facility to process the tomato paste. In other words, when we entered into the arrangement with the farmers in St. Elizabeth that we are going to be processing their pepper mash and their scallion, they have a sure market that you have somebody processing in Hounslow. Now, let's think about a possible scenario. I tell you, it burns me when I see on the news where the farmers are throwing away their tomatoes to the pigs after they have worked long and hard. Can we set up something where the tomatoes can be turned into tomato paste? That's the sort of discussion. What incentive is going to be there for the private sector to invest in such a plant? Because it's going to be millions of US dollars to do that. So we have to start thinking long term. But I believe the answer to your question, we have to ensure that we invest in agriculture and agro-processing. And in agriculture, you're going to need a lot of capital. So I like this concept of a mother farm, where you have a large investor having quite a few thousand acres, but then he can subdivide them into smaller acres for the small farmer. So everybody will participate in this national movement of reducing our food import bill from 1 billion to 500 million, and everybody will be a winner. A famous business executive said, you mustn't change when you have to. And I'm saying to the country, we don't have to know, but we should change now, because it's going to be a dark day any day we have to, and we're scrambling around to ensure that our people of our country can be fed properly. So it's a big question, Al, and I've challenged everybody, government, private sector, everybody. Let us work together to reduce this import bill. And of course, it's going to free up the foreign exchange, because instead of importing 1 billion, import $500 million. You have $500 million extra, so your balance of trade is going to be that much healthier going forward. Great question, Al Edwards. Great question. Don, you made a good point about, this is Al again, Ali on fire. Don, you made a good point about growing remittance. How will GraceKennedy get more people in the diaspora aware of your remittance offering? Al, we're having a marketing campaign. But what I realized about my dear brothers and sisters in the markets overseas, and we talk about digital, etc., they like when you beat the pavement, right? You have to have that face-to-face meeting with them, explaining exactly what is happening. So as I said, we're looking at innovative marketing to reach our market segment over there. We're looking at more aggressive pricing in terms of the cost to send our remittances. We're looking at our agents in Jamaica, of how they can become more consumer-centric when they're addressing the needs of our receivers and our senders. We're looking at the compliance issues, where we can make it more hassle-free, while not compromising in any way our compliance measures, but make it more hassle-free, and that is going to be very important. And of course, being more consumer-centric, training everybody, our agent staff, our own staff at our call centers, to be more polite. But I believe the package of impact, marketing, pricing, agents, compliance, and consumers is going to do the trick, Al. And of course, we have to be prepared to adjust accordingly in terms of our strategy as we move on. This is from Andre Gooden. Do you contemplate this in the subsidiary and the local exchange? Andre, that's a good question. It's not top of the mind now, but it's obviously something, if we believe that it's going to unlock shareholders' value, we will certainly have a look at doing that. So I'm not saying no, but it's not on our priority list at this time. Sorry, is there any thought about re-entering, regulated micro-lending market? Well, as you know, we have Proxim, and we came out of the market, I would think that re-entering the microlending market is not on our radar for now, but things change, market change, interest rates going up, so your cost of funds going up, so I don't think it's be an appropriate time to re-enter the microlending market at this time. But as we say, Andre, who I know very well, the opportunity may come up, and we may see it as an opportunity along with our remittance business to re-enter that market. So I'm not saying no, but we have some other bigger strategic initiatives that we have to ensure that we execute on before we do that. Is that it for me? Is that it? Well, let me just make sure I cover everybody. I think so. Yes, I've covered all the questions. No more questions? Wow. Okay, everybody. That was good. Thank you so much for the questions. It got a chance for me to explain some of our thoughts. I'm looking for my wrap-up sheet. And how we did for time? Right on time. Okay, great. Okay, thank you very much, ladies and gentlemen. This brings today's briefing to an end. Thank you so much for your time and participation. And as of tomorrow, a link of today's broadcast will be available on our corporate website, www.gracekennedy.com, www.gracekennedy.com. If you have any questions, additional questions, please submit them to gkinvestor@gkco.com. Let me say again, we also value your feedback on the streaming experience and any suggestions you may have as to how we can improve this experience for you. Please let us know. Thank you very much. I want to take this opportunity at this time to wish all our participants in the conference and by extension the wider Jamaica have a peaceful, merry, happy Christmas and a healthy and happy New Year. God bless all of you, and hopefully we can see each other soon again. Thank you very much. Much appreciated, everyone, for joining.